Okay, welcome to Chapter 3, Section 2, recording a payroll and payroll taxes. This is our last section in Chapter 3, another short chapter, but they are longer sections, so we'll get started right away. We're going to journalize our payment of a payroll and then also journalize the payment of our payroll taxes. So let's take a look over here. Companies usually when they are going to pay their employees, what they do is they have a special checking account specifically for payroll. And so what they do is they write one large check and put it into their payroll checking account. And then from the payroll checking account, they write payroll checks to each employee. So the amount that gets deposited into the payroll check is exactly the amount that gets paid to all employees. So after all of the employees then cash their checks, that payroll account at the bank will actually have a zero balance. Therefore, we don't have a special account that's needed in our general ledger. It's really only used for the purpose of sending out individual checks to our employees. So there are two ways that we can pay our employees. One is by depositing our payroll checks directly into the employee's checking or savings account. We call that an automatic check deposit. It's one of an EFTs, which we've talked about EFTs before. They're just computerized cash payments. Of course, you can actually send a physical check to the employee as well. Those are the two ways. Regardless of whether we use which one, it doesn't matter. It doesn't change our accounting procedures for when we're recording our payroll or paying our payroll. But just so that you're aware that there are multiple ways that you can pay employees. So when it comes to journalizing the payment of a payroll, it says on July 16th, we paid cash for our bi-weekly payroll, which is $9,029.21. The total payroll was for grills, furniture, and administrative, less our deductions of income tax, employee income tax, for federal and for state, Social Security, Medicare, and medical insurance and retirement plans, and our check number was 820. So I just want to show you on our cash payments journal what happened here. Of course, we have our date, and then our salary expenses get listed for each of our departments. So we have grills, furniture, administrative. Those are going to be our three debits as listed here. They total $9,029.21. So there's grills, furniture, and administrative. And then we go to our credits and we are crediting all of our payables. So our federal, our state, our Social Security, our Medicare, medical, and retirement. So I want to point out here one important thing. We are not technically paying these payroll taxes. What this is, again, is the payment of the payroll. So we are paying our employees at this point. So what we're recognizing is the fact that we had salary expense for each of these three. And then all of our credits are actually increasing those liability accounts that we will eventually pay to the government. And our other cash credit goes to the $9,029.21 that we actually paid to the employees. So this is just showing the T accounts that are broken down. This is the one we just had, same one, just in a journal. And remember that that payment payroll gets journalized in our cash payments journal, and our source documents are going to be checked. So this is just showing a breakdown of how our T accounts look and what's happening in those. We've seen those before. So now let's take a look at when the employer actually has to pay their payroll taxes. So there are 4 separate payroll taxes for employers, and that happens to be the Social Security, the Medicare, and then of course FUTA and SUTA, which we've talked about before. FUTA, of course, is federal unemployment tax, and SUTA is the state unemployment tax. So you can see that they give us the amounts here. FUTA is 0.6% and SUTA is 5.4. So we have our departments again broken down, and we figure out Social Security, Medicare, FUTA and SUTA, and then the total payroll taxes for each of our departments there. And so this is just talking again about FUTA and SUTA, what those are, of course, the federal unemployment program and the state unemployment program. And so once we have our total taxable earnings found, what we can do then is take those times our tax rates. So this is simply adding up our total earnings, our total that's going to Social Security, which is 6.2% of those. Um, and so if you wanted to look specifically at, say, the grills department tax, you could do that by figuring out the 6.2, 1.45, 0.6, and 5.4%. So the total grill department payroll tax is $294.75. And we'll be doing one of these in our work together and on your own. And so when it comes to then journalizing our employer payroll taxes, note that we're just journalizing, recording those payroll taxes. We're not paying those right now. So where this is actually going to go is in our general journal. So it says we recorded employer payroll taxes for the biweekly pay period on July 16th. So the one we just did where we paid our employees, now what we're doing is recording the employer payroll taxes. So again, we have our payroll tax expense for grills, for furniture, and for admin. And then we have our Social Security, Medicare, FUTA, and SUTA. And those amounts, of course, are given to us. The three payroll taxes will be our debits, and then our payables, of course, will be our credits. So this is what it looks like in our general journal. Again, payroll tax expenses are going to be debits, and of course, our payrolls will be our credits. Again, pointing out that this goes in the general journal because we're just recording it. We're not actually paying it, so it's not going in our cash payments journal yet. Of course, there is a time when those liabilities will have to be paid to the government. And so, depending upon whether we're paying federal, state, or local, will depend on the frequency and how much is owed and when. Typically, we call what's called a monthly scheduled depositor, which is based on the amount of money that your employees earn and the size of your company and the amount of taxes you paid in the last year. We say that they have to be paid by the 15th day of the next month. So when that happens, of course, those will go in our cash payments journal. Those will be debiting all of our federal income tax, Social Security, and Medicare. We debit those, and then the total is, of course, a cash credit since we are paying off those liabilities. That's why those payable accounts are debited. As those things are popping up, I'm just going to point out again that I said because they're a monthly scheduled depositor, they pay by the 15th of the next month. And so since it was July 16th we were talking about, they would have to pay those taxes for July by August 15th, which is what the date happens to be here. And then, of course, FUTA and SUTA. FUTA and SUTA are normally paid on the last day of the month. And so here you can see we have FUTA and SUTA being paid off. Of course, because they're being paid, they go in the cash payments journal. And like I said, they're usually paid close to the last day of the month, which July has 31 days. So they're paying them on the 29th, which is A-OK. All right, so we can head on over. Again, it'll be at least a two-parter, possibly three-parter for the work together. And I'll meet you over there and we'll do some paying of payroll taxes.